is Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh, with me Sonia and Anuj. Well, the global cues are confused and confusing, to say the least. Day before yesterday, the Fed decision apparently fired the US markets, but all across Asia, Europe, 24 hours after the Fed decision, the markets actually gave up gains. The GDP data, of course, is weak, and that perhaps would have had some bit of a negative impact. But really, it's the central bank action which is very, very confusing. The BOJ decision is awaited. We will have to wait and see whether that expected increase in stimulus from 80 trillion yen to 100 trillion yen happens. So markets are waiting. But the interpretation could be both ways. If they did give the stimulus, it indicates that the weakness is compelling. If they didn't give the weakness, the markets still have reason to sulk. My sense is that at the moment, the risk-on rally has definitely got more brakes than accelerators.
Oh yes, that's true. Lata, hi, morning. And we have a long day ahead because of so many companies that will be announcing their numbers. But the global cues are looking weak, not just the US GDP data, but also, the pending home sales has fallen. The weekly jobless claims have edged up higher. And even in the European markets, Deutsche Bank fell quite a bit after reporting a net loss of 6 billion euros and big layoffs as well. So the global data is not looking that good. But for our own markets, I think one space that could be in focus today could be the pharma space, because not just because of defensive buying, but because the numbers have looked so good from most of the pharma companies.
You put your finger on it. It's the only set of numbers which have looked good, whether it's Glenmark or Dr. Reddy's or Jubilant. They've all come out looking good. And on the other hand, the non-defensive, the cyclicals, have almost all the big ones have disappointed. Bharat Forge, Crompton, all that came yesterday, economy facing, have disappointed. But my sense is today ICICI might hold the key. If it extends the Axis behavior, the markets will have reason to sulk. But since the markets actually gave a green to ICICI yesterday, my sense is the market knows something. So maybe the ICICI shocker will not, the ICICI result won't be the shocker that Axis was.
Oh yes, all that and more lined up in a bit. But before that, Anuj, morning, we've had a rough last couple of days. At least the index has been grinding lower. How do you see the start of the new series?
Morning, Sonia, sorry. Lots of things lined up, actually. I think the trend will reverse only if the Nifty slips below 8,000. Because, look, the last 3 or 4 days were weak, but you got to put it in context. The market had a non-stop rally before that, and it was expiry week. So there was obviously some profit booking that you saw. Yes, the problem was that all 4 days the market closed at the low point of the day, which is not good news, which was telling you that intraday, short traders were making money. So that's not good news. Let's ignore the FI and DI number for yesterday because it was expiry day. But as Lata pointed out, ICICI Bank numbers. Why is that important? Because at the end of the day, ICICI Bank still is the most important trigger for the Bank Nifty. And Bank Nifty still is your biggest component of the Nifty. So that's why this is important. Now, last quarter, keep in mind, ICICI Bank came out with good set of numbers. And the stock initially rallied before falling again. If there's a follow-up, then there's a good chance that, maybe ICICI Bank makes a higher bottom. And in that case, that would be good news. So that's why ICICI Bank's numbers today could be a bit of a game changer for the near-term trend of the market. And why is that even more important? Because, look, Axis Bank has seen delivery-based selling of 1,500 crores in 2 days. 1,000 crores the previous day, yesterday 500 crores. The market cannot afford 1,500 crores of selling in ICICI Bank. It can afford 1,500 crores of delivery-based selling in Axis Bank. Even that led the market so much lower. But it cannot afford a 1,500 crore delivery-based selling in ICICI Bank. And that's why ICICI Bank today is a more important number than even ITC and Larsen & Toubro. Also, what's that done is that the Nifty is still up 2% this month, but the Bank Nifty has fallen in the red. It's become flat. And just about 1 week back, the Bank Nifty was actually outperforming this month. So that's been the key reversal for the market. And what's been the other problem for this market? The Bank Nifty has slipped below the 50-day moving average. The Nifty is still above that. And technically, it needs to hold 16,800 before it enters a bit of a free fall situation. And that is why ICICI Bank is important. It will decide whether the Bank Nifty holds that 16,800 or not. And what is the other big problem for this market? You'll remember also this month we were talking about the fact that while the Bank Nifty was not performing, the market has got leadership from 3 stocks. Which were these 3 stocks? ITC, Reliance and HDFC. And look at what's happened. ITC is up 6.5% this month, but this week it's down 2.5%. Reliance is up 9% this month, but it's down 1.5% this week. And I think the most crunching blow has come from HDFC. It's up 4% this month, but it's down 5.5% this week. Now, this could be a bit of an expiry play because all these 3 stocks were rallying, and that's why they saw some profit booking. And that is why I said, you could give some benefit of doubt to the bulls that what you saw was essentially an expiry profit booking, nothing more, nothing less, and maybe a bit of nervousness ahead of Bihar. But all said and done, the bigger risk is not whether the Nifty goes to 8,050, sees support there, or whether it slips below 8,000. The bigger risk for me now is that this market has now made a lower top. The last top was 8,600. Now the market has reversed from 8,300. Does this also make a lower bottom? The last bottom was 7,500. Does this go below that? I think that is the bigger risk. As long as the market bounces back from 8,000, 7,800, the bulls should be happy. The bigger worry would emerge if the Nifty starts to go below 8,000 first and then 7,800 later.
That depends on fundamentals, Anuj. We already have Shakti Siva saying that India has more downgrades, double the number of downgrades in the region. So to some extent, the outperformance is going to underperformance may be reinforced by the fundamentals. If the earnings season turns out to be worse than what it has been in the first half, and the first half has not at all been very flattering, and if the Bihar elections doesn't go the way the bulls want them to go, then you cannot deny that there is enough ammunition for the bears.
And I think for that reason, the November 8 results really is now the key, whether the Nifty is going back towards 7,800, sub 7,800, or is going back to test its 200-day moving average. That really is the mini binary event now, Lata.
All right, well, here's what you'll get to see on the show this morning. We'll talk about all of these cues and more. The market has ended lower for 4 days on the trot. Could things get brighter in November, or could there be any kind of bump up? We'll ask Ajay Srivastava, the CEO of Dimensions Consulting. It's all about earnings today. We'll touch base with Amit Kalyani, the Executive Director of Bharat Forge, Praveen Sood, the Group CFO of HCC, Rajat Monga, the CFO and Senior Group President of Yes Bank. And that's not all. Result reactions are also lined up with Umesh Revankar, the MD of Shriram Transport, Anuj Bhansali, the CEO of CEO Finance Strategy and Business Development of Imami Group, as well as Jeevan Das Narayan, the Managing Director of State Bank of Travancore. That's not all. Top trading strategies are lined up with SP Tulsian, Rajat Bose and Vinod Sharma. So as you can see, there's lots happening on our show today.
Okay, on that note, let's take a look at what wise men tell us before we start trading. Chris Wood of CLSA and Shakti Siva of Credit Suisse. It doesn't